Hello friends, how are you? We have been seeing the cash management, and I have also last video I was spoken about cash, five aspects of cash budget, what is to be seen before preparing the cash budget. Okay, so I think probably you would have gone through those videos, and now we have worked out an example. Okay, cash budget already told you is a financial tool available to forecast your cash surplus or cash deficit for a period of time. It's a financial tool. Okay. So cash position is very important because business will suffer and business has to be closed down because if you don't have a cash. If your surplus are well good, if it's a deficit, then you should have a readily line of credit to manage the cash deficit. Okay. Otherwise, business will suffer. So in this case, actually, there will be if there is variance are frequent. You are expecting too much variation in your cash balance. You make it at least once in a fortnight. You can make it. So normally we make for a month or even 6 months also. But thing is, if there is a lot of variations, if you expect a lot of we expect a lot of variations in your cash balance, then you can at least frequently you can make cash budget, making some adjustments so that you can arrive at what will be the cash balance in the near future. Okay, there will be three type of methods used for preparing cash budget. One is adjusted profit loss account. It is used for only long term adjustments. You want to have some acquisition, you want to have some merger, or you want to buy a very big business or equipments, etc. And it is used for, this method is used for forecasting cash in such a situation. Long term use only. So mostly we don't use that. Small business don't use that. Second method is adjusted balance sheet method, where you estimate the assets and liabilities and then arrive at the cash accordingly. If liabilities are more, then there will be cash balance in the asset. There will be cash balance. The difference. You have to estimate the assets and you have to estimate the liabilities. If liabilities are more in a balance sheet, then there will be cash balance, surplus. If assets are more, liabilities are less, and there will be bank overdraft. There will be cash deficit you have borrowed from the bank. Third thing is receipt and payment method, where is a normal is being put to use normally by everybody. Total receipts, cash inflows, cash outflows you estimate, then you arrive at the cash balance. Okay, so very important. This is a very easy thing. So I already worked out an example for you. Instead of working out on the board, I already worked out. I will just explain and see how it is being done. You can follow very easily and you can do your own cash budget very easily. There's nothing hard and fast rule. But thing is, as I told you in the last video, estimating the current assets and payments is very important. So you have to be very careful. So in this example, let us say in this case, there are 3 months, you have to prepare the cash budget for 3 months, okay, for April, May and June, okay. So these are the particulars given. What are the particulars? Sales, materials, wages, overheads, okay. So for the month of February, 56,000, material 48,000, 11,600, 6,000 overheads. Likewise, March, April, May and June figures are given. So this is the estimate. You have to do the same thing. You have to make an estimate for this. You have to make the estimate. Then what is the expected cash balance on 1st April is 20,000. We have to start with the balance, opening balance. You have to start the opening balance. What is the estimated cash? And you want to do it only for April, May, June only. 3 months up to June. So April, May, June. Okay. So this is on 20,000 balance. Then there's some conditions are there, some terms. Materials and overheads to be paid in the next month, not in the same month. Okay. Then wages to be paid during the same month. Wages to be paid in the same month in which it is incurred. Okay. Then terms of sales. So sales, how the receipt will be coming, no sales. 50% they will pay the next month. Nothing will come in the same month of sale. Okay. So 50% will come the next month, and then after that, next following month, another 50%. So if you make in January, sales will be given into two parts. February 50%, March 50%. If you make a sales in January, so 50% will come in the February. Another 50% will come in the month of March. So this is how it goes. 50% sale commission next month, not in the same month, because now we don't know how much he has made the sale. So naturally, sales commission will be in the next month only. Next month. Dividend. So we are paying dividend to the investors, to the who has contributed to the profit, to the capital. So it is in the first May, 30,000 you have to pay in the payments. Okay. Share call money. Share call money means that when they subscribe to a company, they have to pay the equity in different installments. So when you apply for the shares, so share call money they will give first call, second call, final call. They will give. Though first share call money 25,000 due on 1st April and 1st June. 1st April and 1st June. Okay, 1st April and 1st June. They have to receive the money from the shareholders, because who are applied for your shares, we have to receive them. This is the receipt only. Then plant and machinery rupees 10,000 installed in January, but payment to be made in the month of June only. So 10,000 worth of plant and machinery we have installed in January, but payment is to be made in the month of June. So let us start with this. This is the cash budget, receipts and payments. Receipts and payments. Simple thing. There is nothing hard and fast rule. So first we will take the month of April. Let us say April. So we will go April, May, June. So while putting it, we will put like that. No problem. First starting is 20,000. So here 20,000 is there. So 20,000 we have opened here. So starting with the 20,000 cash balance. Okay. So February sales. Is what happens is February sales will come in the month of March and April. Okay. So February sell because 50%, 50%. So February is 56,000. So 50% will come in the month of March. 50% will come in the month of April. Okay. So understood this now. So we have to divide it accordingly. So if we just say this, just 20,000 is okay, no? First you understood this. Second is now 56,000. So first 50 will come in the month of next month. Okay. So in February, so it is okay. Next month. So February sales will come in the month of March. Okay. March we are not doing it, because our period is only April, May, June. So 50%, 150% of February will come in the month of April month. Okay. So February over. So 50% first 50 will come in the month of March. Another 50 will come in the month of April. So our period is only April, May, June only, not March. So it will not come. So you have to put 28,000 here. You got the point? Okay. So now March sales will come in the month of next month 50%. Another following the month another 50%. So in this case, you got the point. So 64,000 divided by 2, 32,000. So March will come, 50% will come in the month of April. Another 50 will come in the month of May. Okay, that's over. Is that over? Now April. So April will come in the month of, so it is 80,000. So 40,000 here, 40,000 here. Okay, April sales will come in the month of May. 40, another 40 is here. Okay, May sales. Okay, May sales is in the month of June only. So May sales. So we are up to May. So May sales, April sales we already done it. So May sales will come in the first 50% will come in the month of June. How much is that? 42. So it's 42. Okay, this is over. With regard to sales, is over. Because June will not come in the June, sir. June will come, sales will come in the month of July, August. So is it over? Is it over? Is it clear? So there's nothing to worry. So it is very easy thing. So now we'll go for the total receipts. So total receipts is 1,05,000. First, take a month of April. Okay. So payments you have to make. Materials. Okay. So materials what are next month. So for the month of April. So March material, okay, will come in the month of April, okay, the month of April, March material, okay. Then March material, overheads. So overheads has to be paid in the next month only. So April you are saying, March what is the overhead? 6,800. So you have to pay the 6,800 year only. So year 50,000. That 50,000 will be year only. 50,000 year only. That March. So it will come in the month of April. Our period is only from starting from April to June only. So year 50,000. So year 50,000. Overheads next month only. Same thing. 6,500, 6,800, 6,800. Okay, this is okay. This is material. Wages. Wages used to be paid. What is the condition? To be paid in the same month. So we are stating the April only. 7,200. So we have to pay in the month of 6,800 wages. You have to pay in the month of April. You have 12,400. 12,400 because it's paid in the same month. Okay, it is to be paid in the same month. So there's no problem. Then sales commission. How much sales commission you have to pay? Sales commission will come in the next month. So what is the sales commission percentage? 5%. What is the sales for the month of March? 64,000. 64,000 into 5%, 3,200 in the month of April. So we arrived in the month of April. Okay. So we have seen already. This also we have seen. This also we have put. We have put all these things here. Receipt you have put here. So this month over. So what is the receipt? 1,05,000 receipt. Okay. What is the payment? Totally, you just told it up. 72,400. So receipt payment receipt is more. Payment is less. So there is surplus of 32,600. This is payment. This is receipt. This is payment. This is receipt. So receipt 1,05,000. Payment is 72,500. So there is a gap. So it is a surplus. So 32,600. 32,600 closing balance of April will become opening balance of next month. Already I have told you. So 32,600. 32,600. Okay. This already we have put already. This already we have put. So totally 1,04,600 total receipt. Let us see the payment. Payment is materials. So materials will be given in the next month only. Materials will be next month. What are the materials for April? 56,000. Okay, 56,000. Okay. Then again, we have to see the we've seen the overheads. Overheads you have to see the overhead also next month. So March will April will come in the month of May. So what is the April is 7,200. 7,200 is will come here because next month only you have to pay. Okay. Then wages same month 13,000. That the May month 13,000 13,000. Okay. Then for sales commission for April sale we will be paying in the month of May. So 5%. 5% of April sale. April sale is 80,000 into 5%, 4,000. We are paying it here. Okay. Then again they are saying preference dividend. I already told you. Preference dividend, they are paying the dividend of 30,000. It's a payment. So we have to make in the first May 30,000. So this is over. May month is over. So total receipt is 1,04,600. Okay, receipt is total 1,04,000 because this closing balance will become opening balance of year. Okay, you got the point. Then 1,04,600. Okay, 1,04,600. Then payment is 1,10,200. This is more than the receipt. This is more than the receipt. And this is a very dangerous thing, situation. So what is the minus? What is the deficit? I already shown it in red color. So what's the deficit? 5,600. The 5,600 will be shown here as a minus balance. Okay. Now let us see that. Now this already we have put. Share call money already we have put. Share call money 20,000 due. And share call money actually 20,000 due in the month of April. Investors have to pay. Your shareholders will pay. Then another 20,000 in the month of June. This is the receipt. Sales already we have charted out. So 5,600 minus 40,000 sales. 40,000 sales receipt. Then 20,000 shareholders money. Okay. This is receipt only. So totally after add all these things minus this 5,600 will be absorbed in this. My mind deficit will be absorbed in the receipt. So receipt will be reduced to 1,01,400. Receipt will be reduced to 1,01,400. Okay, now got the point. So this is receipt is there. Then payments. Same thing happens. Payments. There are materials for the month of May. You will get in the June. So material for the month of May 62,000. You have to pay in the month of June. Wages, overheads also next month. So 8,600. 8,600 in the month of actual. So that is May will come in the month of June as per the terms. Okay, and then wages to be paid in the same month. What is the wages for June? 14,000. So 14,000 you have to pay. So sales commission for the month of May you have to pay in June. So what is the sales is sales for the month of May. So 84,000. So into 5%, 4,200. Okay, 4,200. So all this we have charted out. Then again, one more thing, plant and machinery, which was purchased in the month of, installed in the month of January, but payment has to be made in the month of June. So we have made the payment as 10,000 rupees. Here in the month of June, 10,000 we have shown as a payment because you have to make the payment in the month of June. So totally 98,800 is the payment. Receipt is 1,01,400. So what is the surplus? 2,600 surplus. So this is how we have to jot it out. So this is called receipt and payment method. There's no problem in this. You can easily we can work it out and you can find the balance. No hard and fast rule. You can simply follow this and you can work the cash budget and you can know when the surplus is coming, when deficit is coming, how to manage, you have to work it out. Okay. So there's nothing to worry and you can easily work it out. And you have to read the terms and conditions carefully. And we will see some more sessions also. Please watch with me carefully for further videos. Till we meet again, friends, all the best. Thank you. God bless you. Thank you. Thank you.